Good morning. It's Friday, September 19th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So an action-packed weekend is setting up here. We got the Chicago Bears versus the Dallas Cowboys on Sunday at 3:25. We got the Azerbaijan Formula One race, and then finally we got preseason hockey kicking underway here tonight. So let's check it out on the setup of the precious metals, the U.S. equity markets, with gold prices heading for their fifth straight weekly gain. So why are prices not at record highs right now? So we look like we're just a bit off of those record highs, 37.40-ish on that December contract. Well, Fed Chairman Jerome Powell, he described that rate cut on Wednesday as a risk management move in response to the weakness in the labor market. So he stressed that the policy decisions would be taken meeting by meeting depending on incoming data. This is where it's really important to watch on Thursdays. You've got the initial claims, you got the continuous claims, and then finally 2 weeks from today, you're going to have that first labor report. You'll have the non-farm payrolls, the unemployment rate. So we really want to focus on hiring, wages, wage growth, in all the labor data leading up to it, because if we start to see a rebound in labor, well, that could start to take away those interest rate cut expectations as well. You push on to the silver market, down for about 3 consecutive sessions here, but bouncing back just under about 1%. It's been down about 81 cents, about 2% over the last 3 trading sessions. Year to date, though, silver's up about 44%. It's up $12.75 off of those lows in the start of the year. So all four key stock indices are closing at record highs. First time we've seen that since 2021. Remember, 2021 was coming out of the pandemic, and we were starting to see a turn here on these markets, and those corporate profits, they really started to accelerate, and markets were at these distressed levels where we started to really slingshot higher here onto those record highs. Now the S&P 500 and the NASDAQ just ever so slightly higher here today. It was a really big push and a big move up yesterday, especially on those small caps in the Russell 2000. Now looking at the S&P, it's gained about 2.7% so far this September. What happened to the bears? What happened to the bearish seasonality? If you go back to that first recording that I did, I think it was September 3rd after Labor Day, I actually broke down why that seasonality most likely will not play out and challenge the thesis of just seasonality occurring. That's why seasonality, it's something that, yeah, we'll look at it here. We'll look at things like at the end of the year, how is positioning going on? How is new money coming in and being deployed in these markets? What are the key significant trends that come out here? And a lot of those do repeat year after year, especially with corporate spending and CapEx spending being deployed. But realistically, we're seeing this S&P 500 push on to record highs, surging volume, small and mid caps outperforming notably as they play catch up to the tech market. The prevailing narrative, of course, is the Fed cutting rates into this soft landing, the scenario that's very bullish for stocks. So the outlook, it will be tested again, and it's when we have that employment data, and I said the big one, 2 weeks from today. So in corporate news, you do have Apple rolling out that new iPhone designs, and iPhone 17 Pro Max in the air going underway here. So they've been keep reporting live here from New York at that Apple mega store here, seeing that they got some long lines there. But you push on to the global markets, and this is where I'm going to be doing some investigation over the weekend in conjunction with watching all these sports here. You got the European stocks, they rose overnight. They were lifted by the auto shares. But where things get a little bit interesting is over the weekend, I kind of plan to dive into the significance of Asian stocks. They wiped out their earlier gains here as investor sentiment weakened because the Bank of Japan offloaded quite a bit of its exchange-traded fund holdings here. So we saw the MSCI, it fell about 0.5%. So how big is that? How much are they going to trim? Will it wait? What are the holdings of it? Are they U.S. tech, large caps and things like that? And what are they looking at doing here? Are they looking at deploying that capital elsewhere, or what's going on? That's why I want to see some of these big mover and shakers. I always pay attention to what central banks are doing and things like that, large financial institutions. So the disappointing earnings is really what, if you're a bear, you're looking for coming out from AI companies that have seen massive valuation spikes, seen massive CapEx spending, where that CapEx spending turns out to be just a complete bust. But I could tell you, even in my financial role, I see a lot of AI being deployed. There's several different AI tools that are running in the background, analyzing many of these different markets here at the moment here, doing things that are identifying key developments and then spitting that out to me on a regular minute-by-minute basis here. So that, along with any kind of geopolitical tensions that escalate, you do have President Trump. He's going to be speaking with Xi Jinping in a couple hours here. So one market that I'll be watching beyond the silver, the gold, the U.S. equities, I'll be paying attention to copper. I'll be paying attention to soybeans, because China has not bought any U.S. soybeans whatsoever this year. We've seen soybean prices run up into this particular discussion here. They've been buying all their soybeans from South America. Could he broker some kind of deal that, along with this TikTok deal, to see some kind of purchases of soybeans take place? That could impact the farmer. That impacts the agricultural crops. That affects inflation data, things like that. So it's all a ripple effect. They're all interconnected. You just got to know how to connect the dots. Now, some sectors in focus, you do have Intel options and volumes jumping after as much as 30% here after NVIDIA agreed to invest $5 billion in the chip makers. So this is where you get some of these stocks that were zombies, that were left for dead, are now rising up, and this is where you get the rally broadening out. So what is the market thinking about future interest rate cuts? So you go over to the CME's Fed Watch tool, make sure you bookmark that. I'll scroll down. You got a 91.9% chance that the Fed cuts 25 basis points. There's an 8.1% chance that the Fed leaves those rates unchanged. You go over to the poly market and you start to look at what's going on in that meeting here. So you go to the October 29th, 4% chance of a 50 basis point decrease, 86% chance of a 25 basis point decrease, and 11% no change at all. So as far as economic data coming out today, we've got nothing significant at all, but you're going to have that Fed, Moran, and then also Daly are scheduled to speak. So that's going to be at 11 a.m. Eastern time, and then also 2:30 p.m. and 4 p.m. So we'll get the closing bell with Fed, Moran on Fox Business. So I'll be tuning into that. You look at back to the gold and silver. So they're on the chart pack, which I'll send out here later today, and I'm also writing an exclusive article for Kitco.com on the silver market with our outlook here going forward into 2026 and some key movers and drivers of that market. But you could see here that if you take the recent all-time high, before we broke out, when we tested it up near that 3,600 and broke out from there, call that your support level, go on up to all-time highs, about 37.41, draw about a 50% retracement. You can see that that's kind of your first level of support that comes in right there around that 36.55-ish area. And then you go on to the silver market, your critical level of support, a bit similar here. It's going to be that swing low that we saw here yesterday and the day before, right around that 41.52. You go into the crypto markets, you go down to Bitcoin, you're going to see 116 is kind of where we're kind of consolidating, and I've called that the pivot point here between that first major level of support and about that 123, 125 resistance. So you get down to about 112, 110 right in there, and you get up to 123, 125. We're at that halfway point mark at the moment here. You go to Ether, 42.65, your key level of support, and also call that pretty much your line in the sand here on that market. So you look at the exchange traded funds, they're buying on gold, they're selling on silver, and they're selling on platinum. So they added about 240,000 troy ounce of gold holdings in that previous session here, and then that's the highest level here that we've seen in quite a while. And then you go into the silver market, up 13% as far as percentage change on ETF holdings. They cut about 241,000 ounces. Gold silver ratio anchored, and it feels like we were at this level here for quite a while. Shouldn't use feelings, but we can look and see what it was. But I was reporting that we were at 86-1 for what seemingly was forever before we got that breakaway in the gold market, pushing on up to into the 90s, into even close to that 100 mark before we settled back down when we got this kind of upswing here on the silver market. But 86-1, what types of levels will drive it down to 80-1? Now that would be interesting, and those are some of the developments I'm going to be writing about in that Kitco article. So if you guys got any questions, shoot an email to info@bluelinefutures.com. You want to be an account of us, shoot an email to info@bluelinefutures.com. And remember to register for the chart pack and some other things that we're putting out here. We put out a lot of great content, a lot of great research here. And remember that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading. Have a great weekend. Go Bears.